Good morning, good afternoon, and good evening, whenever you're watching or listening to this, and welcome to Link Up Leaders, your direct link to leaders in supply chain and e-commerce. My name is Lisa Kinski. I'm your producer and co-host, and joined, as always, by Francois Jaffray. Francois, how are you today?
I'm doing fantastic and super excited to talk to who we're talking to today. It's an amazing brand that I'm sure everyone has heard about if you're in the Amazon space or generally in e-commerce. So super excited.
I am too. And just so everybody knows, this is actually the first of a 4-part series that we're doing with Elevate Brands. So over the next 4 weeks, we're going to be speaking to different members of their team. And today we have the man behind the operation himself, Ryan Gnesin. Ryan, good morning. How are you?
Morning. Hi, great to be with you guys. Thanks for having me.
Of course. Thank you for being here. And you are calling in from wonderful Austin, Texas, which is...
Yeah, very rainy Austin, Texas this morning, but it is still wonderful. So, yep.
Yeah, it must rain frequently there, which sounds dumb. It rains frequently in most places, but
it's my first summer in Austin. It hasn't been anywhere near as hot as I expected. Everyone kind of warned me it would be awful. It's been great, but it's been raining more than I expected. So there you go. The barbecue's pretty good though.
Oh, it's great.
It makes up for it. There you go.
It is great barbecue.
Exactly.
Awesome. Well, Ryan, again, thank you so much for being here. For anybody who's not familiar with you, why don't you just give us a little bit of information about your background and how you ended up, with Elevate Brands?
Yeah, sure thing. Well, I got to start. I've always got to explain where my accent comes from because it always throws everybody off.
It's very trusting.
I'm American. I'll just put that on for the.
That is the American thing to do.
So I grew up in South Africa, and I lived there till I was 14. And then, my family moved, and I moved to 2005. We moved to Australia, Sydney, Australia. So I lived there for 10 years, and I studied there and whatnot. And then I got a job out of, after school with a company called Glencore, which is the world's largest commodities trading company. They were based head office in Switzerland. So I spent a year with them in Switzerland, and then they asked me to move to Jakarta, Indonesia, where I went in 2008. All right, and so I was in Jakarta there for 8 years. I was eventually running the Southeast Asian desk for Glencore, and then middle of 2016, having spent the last several years kind of living on an airplane, I just kind of had enough of that and moved to the US, to New York, and so I've been in the US now for about 5 years. So hence the kind of mongrel mixed accent, and then just moved literally like 2 months ago to Austin, right? So it's a bunch of moving around, but yeah, this is I guess this is home for now.
And when it comes to commodities trading, can you explain that a bit? Because I think sometimes there is some level of confusion when it comes to supply chain in particular. When someone from commodities trading comes into the e-commerce world, I've seen it myself where they might mix up a few of the things. But what is commodities trading versus?
Okay. Yeah. So fair question. So the company I worked for, Glencore, trades commodities like bulk commodities. For example, oil, coal, copper, zinc. Grains. So, and it's physical trading, right? So you're literally physically, you're moving these commodities sort of in bulk shipping containers around the world. So specifically in my space, I was based in Indonesia. We would buy commodities from Indonesia, and then we would sell it to the rest of the world. And so, it sounds a little more sexy than it is, right? Because commodities trading can sound it's like a blue collar. It's like you're buying product from mines in Southeast Asia, and then you're arranging the vessels and arranging the barges and arranging the logistics and the letters of credit and the contract, and then selling it to various plants, steel mills, all that kind of stuff in all over Asia. So that's what I did, and it was great experience for me and great training, and sort of at a young age got some really one great thing about that company was they give young guys a lot of leeway. They trust you and they believe in you. They give you a lot of sort of autonomy to go and do your thing and make money for the company. So it was a fantastic experience for me. But I like to say it's a young man's game because, you're constantly on airplanes and traveling and back and forth, and it's exhausting, and it's, my girlfriend hated me at the time and whatnot, so because of all the travel. So, but anyway, moving to e-commerce, in the middle of 2016, I moved to the US. It was kind of blank canvas. I thought it would be exciting to move to New York. I had some friends living in New York. I had no idea what I wanted to do, but I did know I wanted to do something. I liked e-commerce, right? There were several industries that I thought were important, and I wanted to pick an industry that was kind of not at an infancy, not mature, but in a kind of, let's call it like a teenage phase or early teens. And I felt like e-commerce was kind of there and was growing, and I couldn't see any sort of macro trend that would prevent e-commerce from sort of continuing to grow. So I thought e-commerce is a great industry. And so when you're interested in e-commerce, you go check out a couple of Amazon conferences and you kind of start learning about the space, and you realize pretty quickly that Amazon is where the game is. And what I found was just super interesting because, I would meet some of these sellers who were pretty impressive, but they would be running these $10 or $20 million businesses, and it would be them and maybe their husband or wife and like 4 people in the Philippines or something. And I just thought that was fascinating, right? And it became apparent to me that it was this very, very fragmented mom and pop type of industry. And there was like tremendous opportunity. It was growing quickly. There were all these guys making a bunch of money. So it seemed to me like there was a great opportunity to do something there. And so, the initial thesis was actually to start buying some Amazon businesses, right? Because at the time they were trading at like 2 times EBITDA, right? And so you could go buy them, and if you could even grow them slightly, you could kind of make your money back within a year if you could grow them a little. So I thought that was super compelling. What I found pretty quickly, though, was Amazon had these sort of terms of service in place at the time that you couldn't own multiple Amazon accounts, right? And there were all these horror stories of people who would have their accounts shut down because they owned multiple Amazon accounts. There were even crazy stories like people who didn't know each other would be working out of the same Starbucks, and because they were sharing the same IP address in Starbucks, Amazon would shut both of them down, right? So anyway, there were all these horror stories, and I decided that seems like too much concentration risk if to go and fork out capital and then potentially have your account. And I didn't understand the space well enough yet, so I said, well, let's start somewhere else where there was kind of less risk. And so what I did was I tested a whole bunch of different models, right? So I launched 5 private label brands, right? I just kind of was testing. I used Helium 10 and Jungle Scout, and I kind of went and just found some products, launched them, found them in China. So I learned how the private label thing works. And then at the same time, I was doing online arbitrage, where you use some software to kind of find discount footwear and apparel online, and then I would sell it on Amazon. And then we did some retail arbitrage as well in those early days. So I kind of backed up a truck into a Nike factory outlet and a Marshalls, and I would use the Scan Power app, it was the Scoutify app. And I would, you'd scan the barcode, and it would show you what price the product was selling on Amazon, and you could see what the price was in the store, and it would calculate the ROI for you, and it would show you the sales rank on Amazon. So like you had a fairly low risk way of buying inventory and selling it on Amazon. So I did a bunch of that as well. And then finally, so I tested all of this stuff in 2017, right? I was testing all of this, just learning the space. And then the final piece was I did some wholesale where I would buy $10 or $20 or $50,000 worth of inventory from a supplier and then sell that on Amazon. And what I found was the wholesale model, at least for me at the time, the wholesale model was the one that worked really well. So we would get closeout lists of sort of footwear and apparel from Adidas, Reebok, New Balance, and then we would place these orders. So there'd be hundreds of thousands of SKUs, and we would cherry pick exactly which ones we wanted to buy, right? And the interesting thing about Amazon is you can also see with the data Amazon provides, and there's like, for example, the variation viewer with RevSeller. And so you can see not just that an Adidas Ultra Boost is a good shoe, but that the 2018 Ultra Boost men's size 11 is better, for example, than the men's blue size 12 and a half, as an example. So you could see not just which style, but which color, which variation was the best. And so we would cherry pick the styles that we thought were the best, that had the least number of competitors, and then we would sell it on Amazon. And so for 2017, what was it, 17, 18, 19, that was our core focus, and built a pretty nice sizable reselling business. We had an average of about 8,000 or 9,000 SKUs. So
for wholesale.
For wholesale, yeah. So we had 8,000 or 9,000 SKUs that we were selling at any one time on Amazon, right? And so, which is not a small amount of SKUs, and there's operational complexity that comes with managing a business with that many SKUs. And so, we had this fantastic, we built this fantastic sort of operational expertise. We had our Amazon account shut down 3 times because Amazon accused us of selling fake stuff, which of course we didn't. We always had the invoices, but sometimes Amazon had a shoot first, ask questions later approach. So, we had a lot of experience. We dealt with the black box that is kind of Amazon seller support, right? Where you're trying to get someone on the phone and you're pulling your hair out, trying to figure out what's going on, and someone's black hat attacking you and your accounts. So anyway, like all those headaches we experienced, we made all the mistakes, but we made them when we were very small. And so
9,000 SKUs small.
Yes, that's true. But we had raised a very small amount of capital. We'd only raised, like, when I say raised a small amount of capital, we raised $2 million, which is not necessarily a small amount, but it was a loan, and it was personally guaranteed, by the way. And so, we took a very kind of methodical approach. It happened over 2 or 3 years. We built the business up carefully. We built the expertise. I was the guy my business partner and I kind of learned every aspect of Amazon. And it was a great experience. And then, of course, 2019, we decided that, look, we had heard now that the rules for Amazon allowing you to own multiple Amazon accounts had changed, and you could do it as long as you had a different LLC and a bank account, and they were different, and you weren't selling the same product, right? You weren't cross-selling and trying to game the buy box. So 2019, that became apparent to us. So we then started thinking again about, okay, well, the reselling model, the wholesale reselling model is doing great, and it's a very successful business, but it's hard to see how you really scale that into a mega company, right? Because, you don't have brand equity, right? I mean, you don't own the products, you don't have the brand equity. You're only as good as kind of your next trade, or you're only as good as the next batch of inventory you have.
It's a pretty high risk. I mean, if the wholesale supplier, for example, wanted to cut you off because they found a better seller, or they wanted to go direct to consumer instead, that would be a huge risk also for the wholesale model, wouldn't it?
Well, that's true. That is true. And the thing is, like, so let's just say Adidas, for example, cut you out. Well, you would just then start buying Reebok, right? Well, now let's say Reebok, well, there you go buy, Fjell Raven backpacks, right? So I mean, like, we tested off. And so, like, that would happen periodically, right? Like, we used to buy a bunch of Under Armour, and then Under Armour got pretty savvy with that stuff, and they started gating everybody. They had some special relationship. They started gating. You couldn't then sell Under Armour on Amazon. Nike did the same thing for a while, and then that kind of changed in reverse. So it's an ever-evolving, dynamic game, right? And but you're right, there is some risk there, and we had, like, some of the, you're allowed on Amazon, you're allowed to sell to resell brands, right? As long as it's authentic, right? You are allowed to do it. But of course, the brands don't like it, so you would get cease and desist letters from brands. So anyway, like, it was a fine business model. It's perfectly legal. It's above board, but it was, as you say, inherent with risks, and it was hard to see how you really scale that business. But for us, at least, it was an incredible learning ground for how to work with Amazon. And then 2019 is when we started then buying businesses, and we bought our first business in 2019, and kind of the rest is kind of history, and we can talk more about that later.
Well, how does that, because there's a lot to unpack there, but you went through all 4 business models in a very short amount of time. How was that? Did you have a team behind you? Did you have coaches, mentors? Were you part of any mastermind groups to really accomplish it? That's quite significant. I mean, retail arbitrage, online arbitrage, wholesale, and 5 private label brands. That's a lot, even in 5 years.
I was in a hurry, right? I mean, I was always, I wanted to build a big business, and I've always been of the view that you should test a lot of things and experiment, right? Jeff Bezos talks about that a lot. I mean, he likes to say that Amazon, the key to their success is long-term thinking and experimenting and being bold, right? And so I believe that, if you tried a bunch of different things and you double down on your wins and you kill your losses early, that's going to be the recipe for a successful business. I still believe that today. And so that's what it was. And, in terms of like mentoring, yes, I went to a couple of Amazon conferences and I had some of these, I don't know if you call it a mastermind, but there was a group in New Jersey that I went to a couple of events, Amazon consulting experts run by Sam Cohen at the time. I think he may still do classes. I'm not sure, but that's how I learned. And he just kind of showed me the ropes, and then it was just then you go figure it out. And I've always been a believer in talking to a lot of sellers and staying very plugged into the community and going to conferences, and you learn a lot of different things by talking to people and sharing. And it's one of the great things about the Amazon community is people are pretty collaborative. And I've always believed there's more to gain by sharing with people than there is by trying to kind of be concealed with what you have, because the reality is it's not what you do in life or business. It's kind of how you do it, right? You know what I mean? Whether you own a restaurant or whether you're selling shoes on Amazon, it's not a secret necessarily what you do, but how you do it and how you execute is the name of the game. So it's about just trying hard and making mistakes and then fixing them and getting better.
And just to unpack the Alibaba side just a bit, when you went into those 5 private label brands, how did you go about doing that? Because I think that is a big question of new sellers. When they want to start a brand, they don't have necessarily a path forward. They have the coaches, they have the courses. Everyone says like this is the cookie cutter method. But how did you go about doing that?
Well, listen, I got lucky in that respect. My brother at the time was living in China. And he was sourcing products. Like that's what he did. He worked for a company, and he would be the guy who would be in charge of procurement and sourcing products in China. So he spoke Chinese, and he had been visiting he'd spent 5 or 7 at the time. It was like 6 or 7 years visiting factories. So he understood how that worked. So of course for me it was easy. I just pick up the phone and say, hey, how do I do this?
Yeah.
And it was like, well, like go on Alibaba, let's find the product, and then let's contact the factory and make sure you do quality control, and make sure you get the thing compliance checked, and make sure you do it properly, and arrange the freight. And so he kind of helped guide me with the process. It's not that it's not that complicated, really. I mean, you just find a supplier, and now the question is, how do you vet that it's a good supplier is the question. That's always the hard part. My brother helped me do that. So that was the big help. But you can go on Alibaba and you can see which supplier has a lot of reviews. Right. And if they've got one, on Alibaba, if they're 1 year old, that's probably not a good sign. Right. But if they're 5 years old and they have good reviews, you can probably trust that. And then, of course, before you get the product shipped, you get it quality tested. You make sure that it's in line with the specs that you had outlined. And if it is, you give it a crack. And there's always risk, but you can mitigate a lot of that risk by doing some of that diligence. Yeah.
And I guess understanding with your background in commodities trading, you understood a lot of the logistics, a lot of the compliance, a lot of the getting products from point A to point B and making sure that they're, being sold properly, the contractual side too. So, I mean, I'm always a big advocate, especially this year more than ever, of knowing your supply chain and understanding like how that actually works. You can go so much further with your business if you just understand supply chain.
Yeah.
So no, I'm glad you definitely touched on that.
It's totally true. And, when you think about Amazon, the thing that's made Amazon so successful and the third-party ecosystem is their supply chain. It's FBA, right? And people sometimes forget that it's the unsexy stuff that actually is what really moves the needle. I mean, the fact that Amazon could allow hundreds of thousands of sellers to get guaranteed 2-day shipping, right, at a very inexpensive price. I mean, we would ship a pair of shoes to anywhere in the country, guaranteed 2-day delivery, and it would cost us like $5.50. If I try to do that myself, shipping it from my own warehouse, it could be anywhere from like $5 to $15. So what Amazon did there with the supply chain is brilliant, and is why it's going to be so difficult for anyone else to catch them as it relates to being the dominant marketplace. And as you say, for our business as well, it's obviously a critical piece of the puzzle, and making sure because supply chain is one of those things that it's like you don't get especially with, like, we joke with our supply chain team. It's like, you never get you never get a pat on the back for doing a good job, but people always complain if there's a delay or there's a problem, right?
Oh yeah, everybody gets
like,
real loud the second something is wrong.
Yeah, it's like defense more than offense in a way. Although we do have some good initiatives that our guys do, but yeah, it's obviously so important because there's when we buy businesses, the most obvious way to grow a business is if someone's been running out of stock and you can just keep it in stock, right? And vice versa. And vice versa. The easiest way to screw up a business is to then just go run out of stock and make a mistake and under forecast your demand, and then you can't grow the business. So yeah, it's so critical to have demand planning on point and a solid supply chain.
Mm-hmm.
Oh, Lisa, I thought
I'm just unpacking everything in my head because I'm still stuck on like how quickly you moved from online to retail to wholesale to private label, because because they're also different. Like just going to the Marshalls and getting stuff from wholesale, like there's so much in between there that I'm just trying to like think through.
There is, but I mean, there is obviously some commonality there, right? I mean, at the end of the day, it's buying good inventory and selling it on Amazon,
mm-hmm.
right? And so, like, one of the things like people say to us oftentimes is, well, how come you guys are agnostic to category? Like, why don't you pick a category? Why don't you just be supplements, or why don't you just be pets, or why don't you just be outdoors, or whatever it may be? And I've always said that mastery over the platform Amazon and the channels, because not just Amazon USA, right? There's international and there's other channels, whether it's and it's eBay or it's Walmart or it's Target or whatever it may be. But it's mastery over the channel, to me, that is really where the great opportunity is. And so over time, I suspect we may start to like hone in on a certain category. But being really good at selling on the platform is key. And then obviously the second piece is having great inventory to sell, right? Mm-hmm. And so from my perspective, I was always thinking, well, where can I get good inventory from, right? Like, I know Amazon is a beast. There's massive demand. It's a $300 billion marketplace. The third-party market, $300 billion marketplace. Growing, it was growing at whatever it was, 10% a year, and then COVID made it skyrocket. But I looked at that and I said, it is so powerful. The only thing to do is to just make sure you can buy good inventory. So, okay, well, where do you get good inventory from? Well, let's try Nike outlet stores. Let's go to a friends and family day, back up the truck when everything's, 30% discount, and then sell it on Amazon. And it's amazing how quickly it sells, because for me, like, I always believed in testing very small and then growing. So the first time I did it, I bought, 5 pairs of shoes and I put it up on Amazon, and I was amazed. Like, it sold within like 10 days, right? Mm-hmm. And it sold at like a 30% margin. I was like, that is unbelievable. What if I bought, not 5 pairs, but 500 pairs? Well, that also sold within, a few weeks. Okay, well, now where do I get more inventory? Well, let's go wholesale. Let's try. So we're just trying and experimenting, and, I like to say the word massive action, just kind of massive action, testing, trying, iterating, and doubling down on your success.
Mm. But wholesalers aren't the type of companies that Elevate Brands purchases, right?
Yeah, well, today, no. Today, we don't do that. Today, we are exclusively private label. We don't do any of the other stuff, any of the reselling anymore. Not that it's not a good business, but it was, for us at least, there's power in focus, right? Mm-hmm. Once you have nailed the strategy, like, you want to then you want to really focus on that and avoid kind of the shiny penny. I think it's a trap a lot of entrepreneurs fall into, right? Is you just try too many things and you never actually focus on anything. So I want to be clear, we tested a lot of things, but the idea was, once you find something that works, then you kind of go full steam ahead there. So this Amazon private label roll-up was the thing for us that we thought had the greatest amount of upside. So we decided then to focus on that. And so we acquire brands that obviously own their own brand, and they own, some, in many cases, the IP and patents and whatnot.
Mm-hmm. But you are not niche specific. You guys are just looking for a solid business with, a really solid supply chain already in place and the infrastructure set. And
Correct. That's right. I mean, we do have some categories now that we call them kind of clusters now, where you find yourself, for example, in the pets category, we now have several businesses in the pets category, and so we're starting to develop additional expertise there. And organically, I think, over time we may decide to focus on 4 or 5 different categories. So we'll see. That may happen, and we've got some interesting niches that. See, the thing is, what I love about our business model is there are categories that businesses we bought in niches that you would never in a million years think of, right? And they turn out to be great niches, and so and so then you can double down and find more businesses in those niches, right? And so for us, it's kind of been exciting to kind of find and uncover those niches. So again, over time we may focus on 2 or 3, but at the moment we're still exploring and experimenting with many.
And it's interesting that you sort of honed in on this branding aspect, because a lot of times when I will talk to sellers, it almost seems like they are commodity traders, where they will buy something purely based on just like, hey, it's a very high demand, I can make a quick buck on it. I don't care about branding. I don't care that, I'm not going to put it on social media. I'm just going to run high PPC campaigns and hope for the best conversion on them because I have a great supplier, for example. But why is it that you focus specifically on those that have their own brands?
If you have your own brands, obviously you have, first of all, you have more flexibility with what you can do with the product, right? And you don't have the risk that someone could shut you out of Amazon or with a cease and desist or whatever it may be. Mm-hmm. So you have sustainability of the product line, right? I mean, if every time, if you develop a great relationship with a certain brand that's wholesale, and that brand cuts you off, you're always starting from scratch, right? Whereas in our business, once you own a brand, it's yours, right? And so each additional brand, the business is always growing and getting bigger, and we don't have that risk that someone's going to come and chop the legs out from under us, right? And so there's value in that. And if you wanted to IPO or sell your company, whatever it may be one day, there's value in that, right? It's very hard to IPO a company, for example, where you don't own those suppliers, and there's no real sort of longevity to the business, and there's no real brand equity in the company either. So it's harder. I mean, people do it, but it's harder. So that's how we look at it.
Yeah, or even if the wholesaler doesn't cut you off outright, but if they kind of push you out the door, like with Matt Edmondson, he had said that they started charging more the more you purchased. Like
it was odd.
Yeah, it was a really strange model.
Yeah, that's it. And they make the rules, right? It's not your business. It's their brand. They can do what they like. Exactly. You want to be the master of your destiny. You got to own your own brands.
Exactly.
So a lot of it does seem to fall back on risk mitigation when it comes to just like, your own company. For example, private label is significantly more risk averse than arbitrage, online or retail or wholesale. But at the same time, I've always had the question of, isn't Amazon a huge risk in that case? Isn't Amazon itself the platform, the one that has its own terms of service, changes at the drop of a hat? Isn't that extremely risky?
Yeah, well, so let's just talk about those two pieces. So first of all, when you're starting out, private label is actually more risky than arbitrage, right? Than the wholesale model, because in the short term, because if you're launching a brand, you don't know if that brand's going to work. So you may go spend $50,000 and you don't actually know if it's going to make any money. Whereas, and the resale value of that $50,000 may be close to zero. If your product doesn't work, like to sell that and liquidate that, you might get 5 cents in the dollar, right? Whereas if you're buying a pair of Adidas at sort of 50% below, let's call it 70% below retail, right? Worst case scenario, you might lose 10%. Best case scenario, you're making 40, 50%. So the asymmetric risk reward when you're starting is in favor of the wholesale model, which is why we started that way, because you can test and iterate and learn. But then over time, if you're buying businesses, then of course the risk, from a broader business perspective, once you get to our scale, then the asymmetric risk reward then switches to private label, because you're buying businesses that are already working. So
Right.
so yeah, we do always look at our business decisions from that asymmetric risk reward. Is the downside, if the downside is capped at 1 and the upside is potentially 3, over time, you're playing the numbers game, you'll do better. So then in terms of the Amazon concentration risk, this used to be the big question that people used to ask us in the early days, right? Was, well, the concentration risk, Amazon could shut you down anytime. We don't get that question as much in the last kind of 6 to 12 months, right? And the reason is that I think people recognize Amazon ain't going anywhere, okay? And the third-party marketplace has continued to grow so substantially, and it's become one of Amazon's most profitable business units. And Amazon has continued to express and show support for the third-party marketplace, that I think people are very comfortable that it's not going anywhere, right? And there's no reason for them to go. And Amazon, by the way, has got a lot better. In the early days, they were dealing with they've been dealing with this counterfeit stuff and black hat and
they're getting pretty good at it, at catching
hijacking
it.
And
they are getting much better at it, right? And there's something I read, like 200 million reviews is what they've removed off the platform in the last 12 months. There are millions of seller accounts there that they sort of have blocked and not allowed to, because they knew that those guys were doing something. So, and recently, I think there was something like 200,000 Chinese companies. I think they were Chinese mostly. I'm not, but that were apparently involved in black hat and fake reviews and stuff. And many of the big sellers were cut down. So Amazon is getting better at it. And the risk of them shutting you down when you're doing everything right, in my opinion, is reducing. We had our account shut down, as I mentioned, 3 times between 2017 and 2018. And it was super stressful. And the first time, it took us 3 months to get the account back up. And we thought we were done for. And thank goodness we were able to get it back up and running. The second time we were shut down, it took us 3 weeks. And the third time, 3 weeks to get back up. And the third time, it took us 24 hours to get back up and running. So I'm of the view that if you play by the rules, even if there's a mistake and you trip something up accidentally or whatever, even if there's a mistake and Amazon's algorithm trips you up and suspends your account, you will be able to get the account back up and running if you played by the rules and you have done everything right. You follow the process. It's if you're doing something wrong and you're trying to get fake reviews, that's when you have a risk of being shut down and staying down. So yeah, I mean, I don't see that risk as big a deal anymore. Amazon's getting better. Our business model is very much the incentives are aligned with Amazon, right? When we buy a business, what do we do with that business? Well, we oftentimes reduce pricing because we're able to source it cheaper, right? We give it a facelift and we add new images and videos and we make it look more beautiful and more professional, which is good for the Amazon customer. We oftentimes spend more money on advertising and PPC and display ads and DSP and all that other stuff. Great for Amazon. We add new SKUs and new variations. Great for the Amazon customer. We implement compliance procedures which previously may not have been there, right? Better for Amazon. So all of those things that we do, in fact, are better for the Amazon consumer. And so our incentives are very much aligned with Amazon, head office. So there's no reason, in my view, for them to, shut guys like us down or that kind of thing. And so we think the business has far less risk today than it used to sort of 2 or 3 or 4 years ago.
Mm-hmm. Yeah, that's something I wanted to ask was like, especially over the course of COVID and everything like that, we've seen, like aggregators and everything really start to pop up. And obviously the Amazon side of the ecosystem has changed. Have you seen like brands kind of getting like more savvy and, how's like the brand side of the Amazon ecosystem kind of changed?
Yeah, I think, if you look at something that's very easy to observe, which is the level of branding and creative, right? That's put up. The bar is rising. It used to be the case that you could put one photo up and you could sell. And if you had good reviews, you would sell all day long. It is getting more competitive, right? So I mean, any niche that is attractive, because there are thousands and hundreds of thousands of people constantly looking at Jungle Scout and Helium 10 and Viral Launch and looking for those niche opportunities. If they find that window, the space gets crowded pretty quickly. And so the level of branding has absolutely, we've noticed, increased over time. And then there were videos, and now there's A+ content, and the quality of that creative. And many of these brands now you could find in a magazine, whereas that wasn't the case before. So yes, it is getting a little more professional, which I think is great for everybody. It's great for the consumer. It's a bit more competitive, but that's the way business goes, right? And you just have to always stay one step ahead and be on top of your game.
Well, that's where I see it seems to be asking or requiring more operational infrastructure of these companies and brands that traditionally were just selling, like I said, maybe just a commodity. Maybe they were just selling pop sockets, or they were just selling this one, mug, an awesome mug that eCom Engine actually just sent us. I think it's an awesome mug, but if you have no brand behind it, they have a little make it a 5-star day. I think
I'm waiting. Really cool. I'm waiting on mine. Mine's out for delivery.
But it does seem to require now more than ever more operations on the back end, more of a firm supply chain, more of a firm understanding of the marketing and keeping up with, for example, Amazon Live video, and competing with just making new videos itself, and seeing what keywords are changing, what new competitors, like you said, there's hundreds of thousands of them using the same exact keyword research tools. And that's why I'm excited to see companies like yours really help bring these brands up. But it does also seem to me that it is going to be more of a, maybe in the next 5 to 10 years, we are going to see Amazon, the landscape change, right? Because right now, when I go to search for a mug, I see hundreds of pages of just mugs, and it's not what I'm looking for. I'm looking for the best mug that they could possibly sell me, and of course a lot of times it's going to be the sponsored ads, or it's going to be the ones with the highest reviews at the beginning. But I think, and I'd love to get your thoughts on it, but I think Amazon is going to start to prioritize those that have invested the most into the brand, that do have the best IPI scores, for example, and the most solid supply chains that supports Amazon. Is that sort of what you're also? Well, obviously in your industry, that's exactly what you're investing in.
Well, what I would say is, I think at the end of the day, Amazon will prioritize the brands that customers like most. Okay, how do they know which brands customers like most? Well, which brands have the highest rate of conversion, and the flywheel works very efficiently on Amazon. As you get more conversion, you move higher up the page, and if more customers see you and click on you and convert, you'll move even further up the page. So at the end of the day, that is the thing that is going to be most important. Your IPI score is only important to the extent that it's helping you sell more product, because customers are finding your product and buying it. So I don't think that that's going to change anytime soon. At the end of the day, if you have a great product that customers like, that's what matters. And why is branding important? Because more customers are more likely to click on it and convert if you have great images and a great video. Why is your IPI score important? Well, it's only important to the extent that more customers are buying your product, right? Why is PPC important? Why not? Well, it's important to the extent that customers are converting. So it always just comes back to the conversion. If customers like the product, Amazon's going to give you priority, and they may tweak the algorithm here, they may tweak it there, they may give a little more preference to driving traffic from off Amazon to Amazon. But at the end of the day, if you have a great product, and that's always first and foremost what we look for in businesses, is if it's a great product, it kind of takes care of itself to some degree, right? I mean, when we were selling in the shoe space, when we were selling, Reebok, we did zero in our reselling business. We did zero PPC, right? Which is why it was such a great business, because you've got a product that is already ranked 1,000 in shoes, as an example. right? People are already searching for it, already looking for it. You don't have to go spend money on advertising. And so those businesses were 100% organic sales. Now in the private label space, you tend to have to do a bunch of promotion just because it is so competitive. You've got to find a way to push yourself higher up the page. So yeah, I don't see that changing anytime soon. I think Amazon has it fine-tuned and it's pretty efficient.
Well, I think it's efficient to an extent, right? We are, a lot of who we're talking to are PPC experts, for example, and they're seeing the cost of PPC today. Obviously, 2020 had a big impact on it, but they're absolutely skyrocketing. And every day that there's a new seller getting within your niche, whether it's mugs, whether it's whatever the case may be, sports, soccer goals, whatever it is, there's always going to be new competitors, and there's always going to be the need to continue raising that PPC bidding campaign, right? Yeah. Where do you see that projection going? Do you think it's even going to be viable for smaller, newer entrepreneurs to get into Amazon?
Yeah, I mean, so first of all, it does seem like Amazon is starting to realize they're a search engine as much as an e-commerce store, right? And they had something like $13 billion of revenue in advertising last year, and that number is increasing. So I mean, their advertising platform is growing faster than Facebook or Google or any of those guys grew. So yeah, it is Amazon is certainly looking to extract some additional value from sellers through PPC and advertising. I suspect that may continue to increase to some degree. And what it will mean that, yeah, it may be harder for new sellers to get started, although they do give you that kind of honeymoon period. So when you launch a new brand, Amazon does give you a honeymoon period where they actually give you some additional kind of artificial boost from the algorithm. And if you have a great product, I mean, we still launch new products all the time, and a great product is still able to do very well. And the value for the money spent, even though it may seem expensive, we had a business that we bought the other day that the seller was it was their 5th Amazon exit. They sold it to us for $10 million. They had been running the business for 2 years, right? So there is still enormous opportunity to. And by the way, I remembered having these discussions in 2017 and 2018, and people said, if you got into Amazon in 2014 or 2015, you were set. Now it's become too competitive. People would say that in 2017 and 2018. The same people are still saying that today in 2021, right? I mean, every year I hear the same story. And yet every year there are hundreds of thousands of new sellers, and many of them build multi-million-dollar businesses. So Amazon will continue to play around with pricing and PPC and extract value, but at the end of the day, their overarching focus has been very consistent since the 90s, and that is customer obsession, the everything store. And if it got to a point where Amazon found that no new sellers were entering the space because it became too expensive, I think they would change and revise the algorithm again, so to encourage more sellers to enter the space. So I'm of the view that the opportunity is still there to build these multi-million-dollar businesses. When I started this thing in end of 2016, friends of mine who were bankers and private equity guys and thought I was absolutely nuts, right? I ran this pretty big commodities trading desk, and now you're coming and starting an Amazon business, and guys thought I was nuts. Well, those same guys now are asking me, hey, should I come and start an Amazon business, right? If you're telling me I can sell for $10 or $15 million in 2 years, maybe I should go and start an Amazon business, right? And the answer is, yeah, you should. I mean, my money is where my mouth is, right? I mean, that's what we're doing. We buy businesses, but we also launch businesses too. And you just have to be really good at it. So and there's no way to get good at something without doing it, trying, learning, finding the best people, using agencies sometimes as well to help you on your journey. And it is getting more competitive, so you just have to be better at it and make sure that you're mining your keywords properly, and your negative keywords are set properly, and your PPC is highly optimized. That's the way to that's the way to obviously mitigate some of those cost increases, right? I think part of the reason that we're seeing some of those cost increases, by the way, in the CPG space, for example, I had a conversation with some guys yesterday who have some big CPG brands. Apple has turned off, or the location tracking is now set for opt-in as opposed to opt-out, right? And so it's become far more expensive marketing to consumers D2C than it was 12 months ago. And so a lot of those groups are now moving their marketing budget to Amazon. They were always selling on Amazon, but now they're moving some of those marketing budgets to Amazon, which is part of the reason you're seeing certain categories increase in PPC cost.
That's very interesting.
Yeah, and I mean the supply chain today is also the technical term is fucking nuts. Honestly,
Yeah,
I mean it's the logistics and
increased pricing.
Yeah. How are not to get too off topic, but how are you and your team? Obviously, you have a supply chain team, but how are they handling all these ridiculous challenges in supply chain today?
Yeah, it's very challenging for everybody. We're no different. We build solid relationships with our suppliers. In many cases, when we buy businesses, we grow the business, so the volume is increasing. So for us, at least, that helps to mitigate from a cost point of view, because when you increase volume, oftentimes the supplier is willing to give you a discount. So that for us is kind of exactly. So it's kind of helping neutralize some of the increase in costing there, but capacity is an issue, and so we're just having to be very proactive and putting orders ahead of time, which obviously has cash flow implications, which is challenging in itself. But we like everyone else do the best we can. Sometimes we look for backup suppliers in case there's a problem, and so we look for alternative ways to source products. It's challenging, and I think it's going to stay challenging for a good 12 months, right? I think.
Yeah, I mean, it seems like it's going back to even the marketing side with PPC rising and these really tough times in supply chain. I mean, some of the toughest times I think a lot of companies have seen in decades even. It seems like it's more of a game of survival, and those that have the operational assets, so have a solid supply chain team such as yourself, have a solid marketing team that understands how to optimize it such as yourself, but also has the capital and is able to actually order those products ahead, scale up those volumes, invest in storage space, 3PLs, warehousing, domestically and foreign. I think those are definitely the ones that are going to survive and thrive and take advantage of these gaps in the consumer demand, which is why I was getting to the point of elevate brands when it comes to selling your brand itself. Why is now a good time to sell? Because I've seen, I think more, maybe it's not advertising, but it's more talks about this year than I have ever in the past 5 years of Amazon itself.
Oh yeah, for sure. I mean, there's no doubt about it. Well, I mean, COVID had some pretty big implications for e-commerce in general, right? Mm-hmm. So, and I think there were a few big events that happened in 2020 that sort of made our space much more interesting. One was, there's the big guy in the space who raised at $1 billion valuation, so investors became very interested. We've been buying businesses. We've been on Amazon for several years and buying businesses since 2019, right? So I mean, we saw that coming. We're ahead of the game. A lot of the new guys who have come into the space, the aggregators, they started their business kind of somewhere in the middle of 2020 or later, all right? When they saw the pandemic, when investors came into the space, Anker, which is the consumer electronics company, they also IPO'd in China at close to a $10 billion market cap. So investors looked at that and said, wow, that's an interesting thing. Let's put some money into the space, right? And because people used to say, well, you can't build real brands on Amazon, right? Well, when someone IPOs for $10 billion market cap, people say, okay, maybe you can build a brand on Amazon. And So yeah, I mean, I always felt like there was this tidal wave, and you had to kind of just build a surfboard and kind of swim is the analogy I use, and then like wait for the wave to catch you. And that's what we did. And the wave certainly caught us in 2020, right? I mean, that's caught everybody. So again, it was also the fact that there were all these rules then that changed that allowed you to own multiple accounts. Mm-hmm. So with that, I think there were always businesses there, but if you could only sell your business for 2 times EBITDA in 2017, it wasn't that exciting. You might as well just hold on to the business and continue to grow it. But today, when you can sell your business for 4 times EBITDA or 5 times potentially, depending on the product and how big it is and the category, it becomes very compelling to a seller who who's run that business maybe for 2 or 3 years or however long it may be, and has maybe got $1 million of EBITDA or seller or SDE as they call it in the Amazon world, seller's discretionary earnings profit. If you can go sell that business for $5 million, because when you think about it, if a seller is making $1 million profit this year, how much of that do they put into their pocket? Maybe a couple $100,000, $200,000-300,000, because the rest gets reinvested into inventory. These are very cash intensive businesses. It gets reinvested into inventory to grow the business. Well, now you say to a seller, well, I'll pay you $5 million for your business. Well, they were making $300,000 a year. Now you're willing to pay someone $5 million. That's a lot of money. And for a lot of sellers, that's a great opportunity to take some chips off the table, right? Maybe you put $4 million or $4.5 million into investments, property, something else, and then you take that extra $500,000, you start another Amazon business, right? And so that's what we've seen with a lot of the businesses. We're buying 3 or 4 businesses a month at this rate. And that's what we're seeing with a lot of the people selling to us is, what are you going to do with the money? Well, I'm going to put most of it into a property, and then we're going to take some and we're just going to start another Amazon business. Mm-hmm. And it's creating this really interesting dynamic where there's new buyers coming in to buy these businesses, but there's also a lot of new sellers who are continuing, because as I said to you before, my friends who previously thought I was crazy are now thinking to start Amazon and are actually starting to sell on Amazon. So I think there's a continuous influx of new sellers coming into Amazon, and the higher the prices go for selling businesses, the more sellers will come into the space. Mm-hmm. And so we will hit this kind of equilibrium where it becomes too expensive for people to buy businesses, and you're better off than just starting it. Like if, let's just say hypothetically, it was 10 times EBITDA, it was a 10-time multiple EBITDA to that was the market price for buying businesses. Well, if a business is doing $1 million EBITDA and I have to pay $10 million to buy that business, I'm better off spending $8 million and launching that, or $7 million or $5 million to just launch that product myself. Go use brute force to go very aggressively with PPC, get the best branding, the best creative, the best product design, whatever. And with $5 million, you'll probably be far better off than having to pay $10 million for the business. You understand? So there's a point at which it doesn't make sense to buy. You're better off launching. And we're probably getting pretty close to that point, I would say. So that's why I think like now is probably not a bad time to be selling a business. The multiples have increased dramatically in the last kind of 3 or 4 years, right, for selling your business. They've doubled, let's say, or there or thereabout. And the macroeconomic picture is still pretty decent, right? There's a lot of money floating. So, you never know what the future holds. I mean, if someone's thinking to sell their business, it may be a great time. They may kick themselves in 12 months' time, but they may also say, "Oh my God, thank goodness I sold." None of us know, and I never try and even predict what the macro picture is going to do, because I think it's kind of a fool's errand. Very few people do it well, and even fewer people do it well consecutively and consistently. So you kind of make hay while the sun shines, I think, right? And at the same time, build in place a defensible kind of business that if you do see a 20-30% drop in demand, your business can withstand that kind of shock.
Mm-hmm.
Well, that's where I see that a great word that you use, that equilibrium sort of rising on both sides. You mentioned we're going to see a lot of new sellers, but also that new seller that starts with 500,000 from that, 5 million that and 4.5 that he put aside, but he starts with that $500,000 business compared to an Amazon seller that starts with a $5,000 business or a $10,000 business. I think that's where the competition level is going to rise. Hopefully it sets a new bar, but I do, this is just purely my prediction. I know it might be a foolish prediction, but I think that barrier to entry is going to get harder. And I hope it does. As a consumer, it's going to be great for me, because usually that might lead to, let's say, a price war, or to better products quality wise, or to more money flowing into Amazon. So now I could get drones to deliver things to my houses in the same day, whatever the case may be. But no, I love your mindset on it. I'm excited to continue seeing, Elevate brands grow and grow new businesses, and watch, how the market reacts to it. I hope we get to the point where we see some of your brands very recognizable, and see them on TV ads and see them in other stores. And it's going to be awesome for the consumers. And as a very large consumer that I buy everything from, I think everywhere, and not just Amazon. I go into the stores a lot too. I'm excited to see that flow from online to also retail, and see how that works.
Yeah, totally agree. Yeah, guys, I absolutely agree. I've got to go in a sec, but it's an exciting time. It's an exciting space. There's tons of opportunity still there. The Amazon ecosystem is probably going to double. The third-party market probably double in the next, at least most analysts expect it to double in the next, let's say, 5 or 6 years. So it's exciting. There's some good opportunity there, and we're very supportive of sellers. And if they're interested in selling their business, we're happy to chat. And if they're not interested in selling business, we're still happy to chat to sellers, because maybe they're not interested today, but they will be in 12 months' time. And if we can build a relationship, and sometimes people call us and ask for advice of what I could do to position myself better, so that when I'm ready to sell, it's in a good position. And we're here to chat, and we're here to support the community. We're sponsoring some events and whatnot in Prosper next week. We hope to be a very sort of positive net value add to the Amazon seller community and to Amazon in general.
Fantastic. And we've got that website up on the screen, and we'll have it linked in the description of the video and of the audio as well, www.elevatebrands.com. And Ryan, we will let you go. We know that you're super, super busy. If you guys liked what you heard today, please be sure to give us a like, comment, subscribe, share with the network. Be sure to rate us 5 stars on Apple Podcasts, and really wherever you listen to your podcast, share it with your friends. And, of course, turn on your notifications so that you never miss a conversation with leaders in supply chain and e-commerce like Ryan Gnesin, and like the rest of the Elevate team that we're going to be talking to over the next couple of weeks. We're really excited about this series. It's going to be great.
The rest of my team are way more charismatic and interesting than me. I'm sure you'll enjoy talking to them much more.
Well, and I think on Monday we're talking to Jeremy. The following week we have Lo Martin, and then the final week we are talking to Muzzy, I think is his preferred. So
That's it. They're all true experts in their fields, and I'm sure those will be great conversations.
Well, you guys heard it here. Tune in. Cool. Awesome, Ryan. Thank you so much.
Thanks very much, guys, and appreciate you having me on. And we'll talk soon.
Absolutely.
Thank you, Ryan.
Thank you.
Bye, guys.